Hello investors and future investors, welcome to the channel. For today's video, we're going to be doing live trading. I'm going to be going ahead and show you a live trade with option strategies, and you will be getting a complete walkthrough of each option strategy in order for you to go ahead and practice these option strategy. But most importantly, I'll be showing you how to use these option strategies in order for you to make consistent income, and particularly teach you how to grow a small account portfolio. Now, if you are new to options trading or you're trying to use options in order to get some additional income, then you so happen to stumble onto the right video. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. For today's video, we're going to be doing live trading. That's right. All the trading, all the option strategies are going to be executed live in front of you. I'll be giving you a step-by-step walkthrough of how these option strategies are to be worked. We're going to be doing some minor due diligence, and also, which is most important, I'm going to show you how to use these option strategies in order to make consistent income. Now, you guys know how we do it. Let's go ahead and get down and dirty with options. Now, the stock of choice for today is going to be none other than GD.com, and the actual ticker symbol is GD. Now, what we're going to do, we're going to go ahead and jump firstly into the advanced feature, and then we're going to go ahead and look at some basic technical and fundamental analysis. So let's go into the charts first by hitting the advanced feature right here in order to open up our chart. We're going to go ahead now to the 1Y, which is representative of the 1 year outlook. And for those of you that have been watching my channel for a while, you guys know I absolutely love these setups. And by these setups, what I mean, I like when a share price is below the 200-day moving average, and also whenever the RSI is 50 or below. So this chart meets both my criteria. Now, currently, the share price is trading at $31.07. There will be some minor fluctuation because this is a live video and the stock market is open. Now, the share price of 31.07 is currently below the 200-day moving average, and the 200-day moving average gives us a price of around $35.75. So, the RSI right below, right here, is going to be around 46, 47 range. So with the RSI is a momentum indicator which tells us if the share price is going to be overbought or oversold. Now this stock is right smack at the 50 RSI, so this is pretty decent RSI. Moving back to the 200-day moving average, what the 200-day moving average does is that it shows us the average price that the stock has been trading at for the last 200 days or roughly 6 months. So that's going to be around $35. Now let's go ahead and we're going to go back into the chart. Now with the chart, I'm going to bring some few items to your attention. If we go down, the first thing we're going to see is that this company is in Beijing, China. So after I did all my due diligence, this is the only red flag there is. But after I have gone ahead and showed you the option strategy, you're going to realize, hopefully, that the trade is worth the risk and the stock is actually worth the risk. So that's the only red flag I will point out for this stock thus far. Let's go ahead and do some more analysis. Now, the other thing is this stock pays a very good dividend of around 3%. However, unlike American stocks that pay weekly, monthly, or quarterly dividends, this stock actually pays its 3% dividend yield only once per year. So this would not be a good stock if you want to use it for dividends. The 52-week low is around 25.61, whereas the 52-week high is at 47.82. So based on the current share price is a lot closer to the 52-week low than it is to the 52-week high. Now, scrolling even further down, I'm going to bring something to your attention that you probably have never seen before. But right before that, let's check out the analyst ratings. Now, the analysts, 91% of them rated this a buy. Now, this is an extremely strong buy at 91%. So most analysts are very bullish on this stock. Now, moving further down, this is something I want to show you that you probably have not seen in a long time. This actual stock has a 5-star rating. You hardly ever see that, even with the American stocks. Even with Nvidia, Palantir, all the big guys, you do not see, none of them have a 5-star rating. So I find that super impressive. Now, the other thing I really want you to pay attention to is the fair value. The fair value is sitting at $60. However, the current share price is at $31. So if the share price were to go back up now to $60, you'd pretty much double your money. Lastly, let's go ahead and see when it's going to be earnings. So earnings is going to be November 13th, which is a while away. So we don't have to worry about that right now. Now let's go ahead and get into the option strategy and the live trade. And for that, we're going to go to trade JD options down here. Now we have opened up what's known as our options chain. Our option chain is all this information down here that gives us enough information in order for us to go ahead and make a very informed decision on whatever option strategy that we want to implement. Now, speaking of option strategy, before I go ahead, I want you guys to do yourself two favors. Favor number one, always make sure you do your own due diligence before investing. What may work for my portfolio, quite frankly, may not work for yours. Favor number two, always make sure to have an exit strategy. That way, if the trade do decide to go against you, then at least you know how to get out of the trade. Now, for today's video, I'm also going to be highlighting some exit strategies as well. So without further ado, here's the first option strategy I will be doing on JD.com. So we're going to go to buy, we're going to go to call, and we're going to go ahead and select our strike date. The strike date I will be choosing is going to be the January 15th right here, 2027. That's going to give me around 499 days to expiration. So that's roughly going to be equal to around 16 months. So let's go ahead and select that. The reason why I'm going to go ahead to choose the far out expiration date of 2027 is I want to buy myself enough time in order for this particular trade to materialize in my favor. You do not need to go all the way out to 2027. Anything a year or beyond is going to be perfectly fine for this option strategy. Now that I have buy and I have call and I have my long expiration date, I'm going to go ahead and choose my strike price. The strike price I will be going with is going to be the $30 strike price. And once again, the reason I'm using the $30 strike price is because I've already gone ahead and do my own due diligence. Now, because this is a buy option strategy, I'm going to have to pay. The amount I'm going to have to pay is going to be $6.70. Let's go ahead. We're going to select that. I'm going to go ahead, I'm going to hit continue, I'm going to execute the trade, and then I'm going to explain the trade to you. So I'm going to leave the bid ask price here, which is $6.70. As you can see here, the bid price is between $6.55 to $6.70. So any range between that. Now I can go ahead and change this to the mid range, but for purposes of this video, I want this to be filled very quickly. So I'm going to leave what Robinhood suggested, and we're going to do just one contract. I'm going to go down, I'm going to hit review, and then I will be able to hit submit. Now, what it says here is that I'm paying $670 for the right to buy 100 shares of JD for $30 per share by January 15, 2027. So let's go ahead. We're going to go ahead and hit submit. And more than likely, that's going to go through because that's Robinhood's suggestion. And as you can see here, that has been filled. So that option strategy that I just did is what's known as a LEAPS option strategy. LEAPS stands for Long-Term Equity Anticipation Securities. It is a mouthful, hence we say LEAPS. Here's a fun fact for you. If you have one contract, it's going to be a LEAPS option. If you have three, it's still going to be a LEAPS option. It does not change. Now, why would you want to get a LEAPS option in your portfolio? Well, it's quite simple. The LEAPS option allows you to control 100 shares of a stock for a lot lesser price. If I were to go ahead and buy 100 shares of JD right now, it would cost me $31 per share, or it's going to be $3,100 because I have to buy 100 shares in order for me to do options. So that's going to be $3,000. By doing the LEAPS option I just showed you, I only spent $670, and I'm now able to control 100 shares instead of owning the 100 shares outright. Now that I have that LEAPS option in my portfolio, now I'm going to go ahead and show you how to make consistent income. Now, with the LEAPS option, here's the exit strategy, right? This is a very long dated call. You don't have to do anything. What I usually do on my side is that I usually monitor this when it starts becoming 3 months to expiration to see how it's trading. Based on how it's trading, then I decide whether I want to exit the trade or not. The majority of the time when I do my LEAPS option, I always are able to close them way before expiration because my share price has appreciated. The share price meaning when I buy it, let's say I buy it at $31 at the share price right now, come 9 months from now, this share price could have gone up to like $35. What I do, I don't wait to expiration. I go ahead, I just close it out, I lock in my investment gains, and Bob's my uncle. So now, most importantly, let's go ahead and do consistent income. So now we're going to go ahead to sell. We're going to go ahead to call, and then we're going to change our strike date once again. Now, I particularly like doing what's known as monthly expiration dates. So I'm going to look for anything close to 30 days out. So that's going to give me October 3rd. Now, once again, you don't need to choose 30 days. This is what works for my portfolio, so hence I'm going to use this. Feel free to use weekly, bi-weekly, or monthly. Now here's an option tip for you. The further out you go, the better for you. The best strike date is always going to be 45 days to expiration. So always try to keep around that. Now that we have our sell, and we have our call, and we have our monthly expiration date, now I'm going to go ahead and choose my strike price. Now the strike price I'm going to be going with is going to be the $34 price right here. Let's go ahead and we're going to select that one. Now with the $34 strike price, I have a chance of profit of around 82%. Ideally, whenever you're doing the leaps option strategy, the main goal is to keep your leaps option in your portfolio as long as you can. So in order for you to increase the odds of that happening, it's highly advisable that your chance of profit usually needs to be 80% or higher. Most of my leaps, I always get probably higher than 86, probably in the 90 percentile. However, I have been trading GD for a very, very long time, so I know this stock does not have any huge spikes up or spikes down. This stock is pretty much stable, it's pretty much stagnant. So with the $34 strike price, and that gave me an 82% chance of profit, which is desirable, I'm going to get paid. The amount of money I'm going to get paid is going to be 0.51 or $51. Once again, we are dealing with options contract, so we need to multiply our premium of $51 by 100 shares, and that's going to give us $51. I'm going to go ahead, I'm going to hit continue. I'm going to leave the price once again, the bid ask price. In order for this to be filled while I'm doing this, we're going to hit review. And as you can see here, the estimated credit I will be getting is going to be $50.96, or rather $51. So once I go ahead and hit review, I'm going to be getting this money into my portfolio right away. Let's go ahead. We're going to hit review. And then it tells me I'm agreeing to sell 100 shares of JD at $34 on or before October 3rd. I'm going to give you the expiration. I'm going to give you the exit strategy for this trade as well. So let's go ahead. We're going to hit submit. And that should be filled because the suggested price was Robinhood price. And there you go. That has been filled. Now, one thing I want to go through, which is very important, is going to be your ROI. Your ROI, or what's known as your return on investment, or how I like to call on this channel, investment gains, is going to be the percentage gain you got on that trade. So the percentage gain is going to be the amount of premium you receive, which is going to be $51. You're going to divide that by the amount of cash you had to use to purchase your leaps option, and that should give you your investment gains or your ROI. So that was $51. We're going to divide that by $670, and that's a 7% return. So a 7% return is a very lucrative return in my personal opinion. That definitely works for my portfolio. So you're going to be getting, if everything works out, you will be getting around 7% return every single month doing this particular option strategy. So the ROI or investment gains is phenomenal with this particular option and this particular stock. Now, let's go ahead and explain the exit strategy for the covered call. Now, this option strategy I just did here is known as the covered call. Most of you already know this. Now, with the covered call option strategy, what you want to do is that you want to do this on a regular basis and keep generating consistent income. Now, there's two ways this trade could go. Remember, in order for us to do this covered call option strategy, we are using the leaps option that I just purchased in my portfolio in order to go ahead and make that consistent income. So come expiration date of October 3rd, ideally what you want the share price of JD to remain below the price you chose, which was $34, as you can see right here. Once that happens, then you're going to keep your $50. You're going to have your leaps option release back to you. Remember, you use that as collateral. You're going to have that release back to you, and then you could go repeat, rinse, and then keep doing this to just keep generating consistent income. That consistent income you'll be getting on a monthly basis, that's what particularly use to help grow small account portfolios. Now, that's one way this could go. The other way this strategy could go, the other exit strategy, is that come once again October 3rd, if this share price right here of $31 happen to break past the strike price we chose for our covered call, if it goes above the $34, then now what Robinhood is going to do is that Robinhood is going to sell our leaps option. So we're going to lose that leaps option, but it's not going to be a total loss. Once the leaps option is sold, you're going to get that money. Then you're going to have to keep this $51. And also, we're going to have to pay to close out the covered call. Now, there will be a difference. Your difference can possibly be a negative or a positive. Whatever the difference is, Robinhood is going to go ahead and put it in your portfolio. Now, you do not want the share price to go above your strike price. Remember, I did mention the whole point of getting the leaps in your portfolio is in order for you to hold it in your portfolio as long as possible to use it to make consistent income. So here's another exit strategy. If come expiration date, your covered call is in danger of being assigned, meaning you're going to lose your leaps, what you can do is go ahead and roll out your strike price. Now, rolling is for an entire video, which I have done. So if you guys want to know how to roll options, just go ahead and type in options rolling in my videos, and it's going to pop up. All the videos that shows you rolling is going to pop up. Now, there you have it, investors and future investors. This is our live trade for today. I will be using JD.com with my leaps option, and then I'm going to go ahead and sell consistent covered calls on a monthly basis in order to just keep generating income. The income I'm going to be making on a monthly basis is roughly going to be around 7%. It is not an exact science. Some days you're going to make less than 7%, some days you're going to make more than 7%, but the average should be 7%. I would like to reiterate one more time. The whole purpose of doing the PMCC, which is this option strategy, is that you want to keep your leaps option in your portfolio as long as you can. That's what helps you keep generating consistent income. Now, let me just summarize the entire option strategy. The entire option strategy is known as the PMCC, or poor man's covered call. The PMCC consists of two other option strategies, which is namely a leaps option. You first need to go out and buy a leaps option, which is going to now be used for collateral in order for you to go ahead and do the second option strategy, which is going to be sell covered calls. The leaps option, and you use it to sell covered calls, once again, is known as the PMCC. The PMCC is an amazing option strategy which helps you grow your account portfolio exponentially. Now, if you are new to options, I would not suggest you go ahead and try this option strategy quite yet. Make sure you know what you're doing before you go ahead and do this. Now, one last thing, these videos are mainly for education and entertainment purposes. Like I told you, please do your own due diligence, and I just showed you what I did with my portfolio. So this may work for me, it may not work for you. Now, for those who have made it to the end of the video, you guys are the real investors and future investors. If you haven't already, now would be the second perfect opportunity in order for you to go ahead and like the video, subscribe to the channel. Most importantly, if there's anyone out there you know struggling to grow a small account portfolio, then the right thing to do is to go ahead and share this video with them. Together, let's help as many people as we can make consistent income from trading options. Now, until the next video, keep pushing your investments.